All right, what's going, guys? Today is Friday, and we have so many things to talk about today. But first of all, let's get the important things out of the way. Let me just go through. Yeah, by the way, let's cover some news today. I don't even have time for this because let's talk about Peloton first of all. Okay, so Peloton halt productions of its bike treadmill and demand wanes. Okay, so first of all, for people who do not know what Peloton is this stationary bike company. Basically, during the pandemic peak, this was one of the best company to really invest in. They went from all the way from $20 all the way to $120 and even more. Afterwards, they kind of just slowly climbed downwards to about a $30 low. After which we went through the most horrible thing that can happen, which is news that they are going to halt production. So a stationary bicycle company decided to halt production on their bicycles. Okay. Of course, this news is not completed. Okay, this news is not completed. But let me just go through the entire thing with you guys first, which is Peloton temporarily halting production of its connected fitness products as consumer demand wanes, and the company looks to control costs, according to internal documents obtained by CNBC. Okay, so first of all, what is actually being said here is saying that Peloton is going to halt their production temporarily, of course. That's connected to all their fitness products. But the thing is, what they're intending to do is to control costs. Okay, so right here, I'm going to pull up an additional, hold on, that's not it. I'm going to pull up something that the Peloton CEO actually said. Okay, this is by Peloton CEO. Rumors that we are halting all production of bikes and treads are false. Okay, are false. So what happened is, in a letter to his employees first noted on Business Insider, Foley said he was saddened that Peloton employees read things without clarity and context that they deserve. This week, we have experienced leaks containing confidential information that led to a flurry of speculative articles in the press. So I'm pretty sure what he was actually referring to was this article. Okay, so what is so crazy about this is because, first of all, you have to understand that in bigger companies, we have stock compensation. Okay, so for example, if you are an employee in Peloton, imagine if you are this employee in Peloton for the past, say, 2 years. Okay, and the company basically tell you, all right, you know what? If you are going to sign with us, your salary is going to be, say, $120,000 a year, and we're going to be giving you stocks compensation as well. This is in order for them to actually kind of like motivate their employees to do even better for the company by having skin in the game. Fair enough. I think a lot of companies actually do that. So, for example, if the Peloton employee basically gotten, say, 200 stocks compensation every single year, and back then Peloton was at about $100. Okay, so it feels great to get this kind of compensation, but when it actually comes down to it, when Peloton actually drops all the way down to what they are today, they actually drop all the way to $24, and that was scary. But of course, during the last few hours, the last hour actually of the after hours, when the CEO of Peloton actually came up to say, you know what, this is all false. Basically, the market kind of like, okay, you know what, if it's really false as what they are saying, then that could be all right. Okay, so technically what they're saying is that, okay, rumors that we're halting all production of bikes and treads are false. Connected fitness is here to stay. Okay, Foley pointed out that the company feels good about right-sizing our production as it evolves to a more seasonal demand curves. We are resetting our production levels for sustainable growth. Okay, so basically what's actually being said over here is quite, okay, I won't say super huge, but the thing is that what's actually being said over here is technically the same thing. I don't think that halting of production is going to be false news. If anything, I feel that most likely what the CEO is trying to do is kind of put out the fire that's being put out there. Because you do have to understand what Peloton did here today essentially is putting a stop to pandemic stocks in general. Okay, so your Zoom technologies, your Netflix, which I'm going to talk about Netflix earnings as well. It's going to be a crazy one to talk about. So yeah, basically look at this. The entire market thinks that the tech stock, especially towards the pandemic level of tech stocks, are so dangerous for us to really get into right now. There is so, okay, pre-market is open. Let's look at Peloton in a bit. But yeah, people are basically thinking that the market is so bad right now. No one dares to really go against the actual recovery market, and people are just basically saying that since Peloton is going to go to zero, Zoom is probably going to go to zero. People will probably think that Netflix is going to go to zero, Disney might go to zero. We don't know, and all this kind of speculation will happen. And because of that, I think that this can kind of cause this sort of domino effect for a lot of companies because of what Peloton actually reported today. So that's my worry. But okay, let's get Peloton out of the way first. Let's go through Netflix. Okay, so Netflix is expected to log smaller profit as it spends more on content. Okay, I think this is very normal. But we'll talk more about Netflix later on. I think that will be quite interesting for us to actually talk about. But okay, Metaverse. What has Metaverse has to do with Microsoft deal with Activision? Okay, this was actually out. I think yesterday or the day before. I thought it was actually quite interesting after I gave it a few eyes on it. But they're saying when we think about our vision for what a metaverse can be, we believe there won't be a single centralized metaverse. So basically, they're talking about a multiverse. Okay, like your Marvel style multiverse of madness kind of thing, which I think is very, very normal because like how we think that there will be a metaverse for your Decentraland, there will be a metaverse for your sandbox, there will be a metaverse for your whatever coin or whatever, because at the end of the day, a metaverse is basically going to be like a country, and a country is going to use a certain currency, just like how we are basically in this world. My country basically going to be using Singapore dollars, US going to be using US dollars, just depending on how big your metaverse is going to be. Okay, and because of that, they are saying we need to support many metaverse platforms. So this is actually quite bullish on metaverse in general. Of course, Sony, on the other hand, no, not Sony. I think it was Nintendo. Nintendo CEO thinks that metaverse is not going to happen at all. But I think there's going to be a whole nother ball game around it as well. So analysts who follow the company says, Microsoft's way of positioning its booming game business as the on-ramp to the metaverse, a future vision on the internet has been subject of growing hype, especially since Facebook announced a new focus and a new name Meta Platforms incorporation in October in the metaverse. So the tech industry thinking goes, people will come together in digital form to work, play, shop, and socialize in immersive virtual world where they see each other as avatars. Okay, so this is basically just giving people the ramp up to what metaverse is going to be all about. And I think it's going to be very, very interesting. I think what they're basically saying is that metaverse is definitely going to be here to stay, and because of that, I feel that we're going to see a lot of changes to this. Let me just do this first. Okay, yeah. Okay, anyway, so the video game software was already a more than $100 billion global industry before the COVID-19 pandemic, during which game became even more popular with movie going and other forms of public entertainment curtailed. Okay, so I think over here, they're basically talking about how Microsoft basically wants to get into more of the more acquisition. So same thing, Microsoft still have plenty of reasons to acquire Activision, which is why I think after the acquisition of Activision, Sony basically dropped a lot of stocks. The price just got dumped because people basically thought that Microsoft is gonna be so strong of a contender that it's gonna be crazy. But yeah, this is an interesting one. Let's look at Bloomberg. Okay, China vows to curb technology firm influence on governments. I think this is a very interesting one. So, as much as we are being bullish on the metaverse on the US side of things, but when China actually comes in to kind of say this kind of thing, where they feel that because of the influence that tech companies have on the government, had on the government beforehand, they are basically just saying that we should probably not give that much power to the tech companies for them to not have any sort of influence over the governments in general. So I think it's going to be interesting because over here they are going to say that targeting corruption is in all aspects of society comes as President Xi Jinping seeks to secure an unprecedented third term at China, blah, blah, blah. Okay, laid out a vision for common prosperity to redistribute wealth among China's 1.4 billion people in the response to the yawning wealth gap that threatens to stoke social unrest. Okay, so technically what they're trying to do is because a communist party level of movement is basically trying to spread the wealth among everyone so that you do not have someone that's like, they are non-capitalistic, so they do not want people to kind of like kind of monopolize the market as much, and because of that, they are trying to kind of just like the headline actually say, trying to just lower the influence on government. So anti-corruption targets include SOE, the financial sector, and CCP. Okay, so I think they did a very short article, but I'm pretty sure this is just an opinions article. Why the hell do I even have this? Hold on. Oh, I'm not even signed in. Okay, I am. Okay, never mind. Yeah, but anyway, let's move on to the next one. Russia proposes crypto crackdown, okay, and Bitcoin's direction, no problem. So basically, Russia came out with this new guideline saying that, okay, you know what we're going to be doing is that we're not going to accept people to mine Bitcoin, we're not going to accept people to trade Bitcoin, okay, but if you have this in your offshore balance account, your balance sheet, other places, we don't want to know. If you have it, we're not going to stop you from possessing Bitcoin, but you are not allowed to be trading and mining Bitcoin, which is kind of big because when China actually banned Bitcoin per se, banned or regulated Bitcoin, basically people who moved on from China started to move over to Russia, moved to US, moved to Kazakhstan, Uzbekistan, Venezuela, countries that would be a lot more welcoming to a level of mining of Bitcoin. And because of that, I think, of course, we wouldn't expect this to be that bad of a news because Russia basically saying that the central bank, they're kind of just worried that if people are giving more power to Bitcoin, then eventually there's less power to their own currency. And I think that's a very normal take for a lot of countries that are worried that their main currency is not going to turn out well. So yeah, the largest digital currency by market value rose as much as 4.2% to $43,000 during New York trading hours. Right now, like as of recording, let me see. Do I have it here? Yeah, as of recording, Bitcoin is at $39,000. Okay, we just went down even more. So this article basically are saying that, oh, we don't have to worry at all and that kind of thing. But right now, what we're afraid of is this tech bear run. I keep saying bull run, but this is going to be a tech bear run. And the thing about Bitcoin is that it's naturally moving more like a tech stock. At the start, we thought that Bitcoin was more of a inflation hedge, but over time, Bitcoin is acting more and more like a tech stock, such as when inflation actually happens, people want risk off, and when people want risk off, people get their hands off Bitcoin. People get their hands off tech stocks. People get their hands off small caps, fintechs, all this. And because of that, I think Bitcoin is starting to behave in that manner as well. Bitcoin right now, $38,900. Okay, we are entering dangerous levels. Okay, Bitcoin basically just broke support. Right now, we can imagine that Bitcoin literally just broke support over here. So that's gonna be tough for us to really look at. Okay. 6.2. Yeah, okay, this is basically what I just talked about as well. Let's see. Okay, Netflix. Okay, I think we finally have to talk about this. This Netflix still on a tear. Why the stock is limping into earnings? So for myself, before the earnings actually came out, I actually talked about it and I said that, I think that it's going to be interesting for us to really look into Netflix and why Netflix is actually going to be a good company. A lot of people actually have good things to say about the company. If you actually go through this entire thing, basically a lot of people are saying good things about the company. So over here, let's look at Piper Sandler. Okay, they're saying overweight rating, $700, saying that, okay, erratic in the near term, see long-term growth over 25 million subscribers a year for the foreseeable future. And free cash flow, the FCF, should be handily positive in 2022. Okay, valuation looks compelling relative to the last 5 years. Okay, over here, that's wrong. Okay, over here, with massive content slate lineup in 2022. So same thing for this argument. Basically, they're saying that because of the amount of content they're going to be pumping out, gradually we are expecting 2022 to be a good year for Netflix. Okay. Over here, on the other hand, they're saying that Paramount Plus, which is with Viacom CBS, Peacock from Comcast, and of course, similarly, we also have Disney with Disney Plus, Roku, and such. All of them are going to be destroyed because this is, of course, in hindsight, we understand that Netflix just gave gave a very, very bad report. But we'll cover that before we end this. But yeah, 2022 should prove that no one single company can have a monopoly on great content. Okay, so he repeated his neutral rating, and he's saying that we'll focus on Netflix's relatively high valuation and the longer term implication of hitting a subscriber ceiling in their most valuable region of the world. So what is actually being said over here is the most important thing, because right now what they're saying is that the market is saturated. Okay, because imagine this. Okay, you and I, we both probably have a Netflix account, or we probably know of someone who has a Netflix account, and because of that, it doesn't make sense for you to keep thinking that Netflix is going to have a year, a better year, a better year, a better year, and a better year. Okay, because at some point of time, if you're taking into consideration that Netflix is going to have a kick-ass year or a kick-ass 2 to 3 years, we are also taking into consideration that they are going to have good lineups, they're going to have good movies, they're going to have good directors, good series and such. Okay, and because of that, we have to take into consideration that because of all this sort of thinking, we are going to enter where Netflix is going to be having all these subscribers staying at the top of the top. And because of that, if we take into consideration that no one's going to leave Netflix, no subscriber is going to leave Netflix, where are we going to get new subscribers? Okay, we are not going to suddenly go into a baby booming generation where suddenly there's so many kids that are going to come out of nowhere and subscribe to your Netflix. Nor are we going to go into this era where the current aging population is going to suddenly go be like, you know what? We're not going to watch the television. We're going to subscribe to Netflix. Okay, it's not going to happen. And because of that, I think that the market is very, very saturated on that sense. And same thing, this actually leads into the lack of demand as well. And also, finally, it will be the competition. So the competition for Netflix, like I said before, you have your Viacom, you have your Comcast, you have your Disney Plus, you have your Roku, you have Discovery, whatever it is, all these streaming, all the ABCs as well, let's not forget, all these streaming services are basically fighting for attention. And I think it's very normal for us to see streaming services fighting for attention, because at the end of the day, that's what we do expect of all these streaming services. So over here, we are going to look at the shareholder letter. Okay, so over here, this is directly from Netflix themselves. So over here, you can see it for quarter 4 of 2021, right here in the darkened columns. Right now, we saw year-over-year growth at 16%, which is great. Okay, we saw 16%. Of course, this is slightly lower than what we usually see. We saw 16.3% the last quarter. The previous quarter was 19.4%, and the previous quarter was 24.2%. Do take note that for quarter 4 of 2020, quarter 1 and quarter 2 of 2021, these are so high growth because of the pandemic. We are so-called fresh out from the pandemic. We got Delta, we got Omicron. Okay, I won't say Omicron. We got Delta, we got Alpha, we got Mu. All these variants basically first came out during that period of time. And because of that, people are basically starting to really get into the whole streaming services. So Netflix is definitely going to do very, very well. Okay, but in quarter 4, basically, it dropped. The growth rate actually dropped to 16%. But that is not the worst part. Okay, the worst part is over here. At quarter 1 of 2022 forecast, we are expecting the year-over-year growth percentage to be 10%. Okay, and this means that we're going to have diminishing year-over-year data more and more in the next few quarters as well. And that's why this is going to be very, very scary, because I think that due to this sort of forecast, other companies are basically getting a huge hit out of it as well. I'm pretty sure Disney is going to get hit. Let me just open up Disney. DIS. Disney is down 3%. I'm pretty sure Roku is down almost 6%. Okay, and yeah, because of that, a lot of other platforms are getting hit because of this situation as well. And yeah, if we're expecting the growth to drop by this much in 2022, it kind of give us a foreshadow of what might happen for quarter 1 of 2022 for all the streaming platforms that I actually spoke of before. So yeah, I think over here they're talking about how this is not going to be good for the company. Basically, if you actually read the entire report, I actually spent quite a lot of time reading the report. Let me just investor relations Netflix. quarterly earnings, financial statement. Okay, you know what? I'm just gonna download this. Actually, I actually downloaded it already, but yeah, okay. Okay, I don't use Excel on this, so screw that. Okay, let's see. 3 months. Okay, over here. So if we're looking at their revenue, if we look quarter to quarter, their revenue is it did increase a little bit, but because the cost of revenue is actually going up, the marketing actually went up a little bit as well. Okay, so I think marketing is going to be this cost that will continue going up exponentially, especially in the next few quarter. So during this period of time, during the whole 2019, hold on, that's not it. In this one, yeah, okay. For marketing, I think for this one, it's going to go up exponentially. Hold on, let me just zoom in for you guys so that you can actually see. Okay, so right now they're actually spending 792. So this $792 million. Okay, they're spending $792 million in marketing for Netflix in this current quarter as compared to the previous quarter that was reported. Where the previous quarter was spending $635 million on marketing. I expect marketing costs to go up exponentially because especially during this period of time, let's take the previous 2 quarters. They are not spending as much because during the pandemic, basically Netflix became this stay at home stock. Netflix didn't really need much. Introduction or in a sense more advertisement on that side. So I think for that, I feel that the marketing cost for Netflix might actually go up, but I'm not exactly sure if this is going to be a good cash burn in the next few quarters. So it's going to be dangerous for us to look at that. Technology and development, yeah, okay. So over here, this basically they're talking about closer to R&D, and yeah, because they are not doing hardware, so it's more T&D. So they're going to be spending more on this. I'm pretty sure this is going to be more on the development of the platform itself, trying to make the platform a lot better for the end consumer for them to use. And yeah, okay, let's see what actually is the biggest issue here. The benefit from income taxes, okay, nothing much. Yeah, so if we actually compare it from the previous quarter, the EPS we had $3.27, and for this quarter we had $1.37. This is like more than half down from the previous quarter EPS. And because of that, I think this is like in dangerous territory. I think in terms of the balance sheet wise, I don't think there's anything that is like very, very interesting for us to really look at. Let me just turn this down. Yeah, so yeah, because of that, I think that Netflix is going to be very interesting for us to really look at as well. And I think we are definitely going to see Disney's earnings is going to be interesting as well. So over here, actually, the earnings that I said to take note of, I did not include Netflix, but because of this, I actually included Disney and Roku into this mix. So I think it's going to be interesting for us to look at for the both of them. But yeah, I think because of that, we have a lot of BS that's happening in the market right now. And yeah, I'm not sure what to really think about this. I feel that definitely Netflix. I think Netflix is definitely going to be here to stay. I don't think Netflix is going to be bad as a company. Oh, okay. Something that's interesting here as well. They actually said what are TV shows that actually did well and what are the movies that actually did well. So in terms of like global searches, TV shows that actually did well was Squid Game, Bridgerton, WandaVision, Cobra Kai, Loki, all this, okay? And most of them are from Netflix, okay? And then over at the movies side of things, not a lot of them are actually from Netflix, which I can completely understand. I think Marvel kind of dominated the entire movie scene for the entire 2021. So you can kind of see that as well. Eternals up here, Black Widow is up here, Shang-Chi is up here. So because of that, I can see why the movie side of things might be dominated by Marvel, but for the TV side of things, Netflix is kind of dominating. And of course, we do hope to see this sort of continuous growth for Netflix in the near future as well. But I'm not going to be very, very hopeful on this. Personally, I wanted to speculate that. I wanted to speculate on the side of Netflix actually getting better for this current earnings. I'm very, very happy that I did not do anything about my speculation. Because usually I would, if I'm actually bullish on it, I might actually buy calls on it. And because of that, I did not really buy calls on it. So I'm very happy that I didn't do anything about it. But yeah, I think it's gonna be kind of scary for us to look at the Disney one. I think it's gonna be scary to look at the Roku one. Viacom, I think is still normal because Viacom, I don't really have much expectation on it. But yeah, basically that's the whole thing about Netflix. I think there won't be much earnings today. Because today is a Friday. I think today let's actually take a look at the earnings. Let's see what the earnings that we want to look at. We are looking at. I'm almost certain that there's only one page for earning for Friday, but nothing necessarily caught my eye. So I'm not going to stay up till 6 a.m. for this or 7 a.m. For whatever's going to happen here. Oh no. Why is it not loading? Can I get it? Can I get it? Okay, cool. So Friday, yeah, only one page, nothing crazy over here. I think Monday's gonna be interesting. We get IBM. We got Brown, and yeah, there's nothing else. Damn. I think Tuesday is the interesting one. We got Microsoft, J&J, Verizon, Texas Instrument, General Electric, 3M. Wow. Okay. Yeah. So Tuesday is going to be the interesting one, and Tuesday I'm going to stay all the way to 7 a.m. for me to really go through all the earnings. Probably. There's only probably two or even three. There's going to be after hours. Everything else is going to be out in the pre-market most likely. So yeah, I think that's not going to be that big of an issue. But yeah, okay. So anyway, that's kind of all we have for the news. Let me just take one final look at the market. Let's look at the market. Singapore to extend COVID booster program for teens. Yeah, I already saw that earlier on my way back home. Singapore second SPAC made its debut on Friday, and the third one is on its way. Honestly, SPAC, I don't really want to talk about SPAC. Not a big fan of SPACs anymore. Yeah, okay. I do wanna look at this. I think this is the more interesting one. I actually haven't read this. So Bitcoin plummeted by more than 8% in the last 24 hours, and Ether dived to more than 9% according to CoinDesk. About $147 billion will wipe off the entire cryptocurrency market in the past 24 hours, according to CoinMarketCap.com. It came after Wall Street losses on Thursday, with the Nasdaq down almost 5% this week, and the S&P 500 into its third straight week of losses. So this was what I was talking about. Yesterday, we had a good market opening, okay? We had the Nasdaq going up 2%. We had Dow Jones going up 400 points. We had the S&P going up, I think, 60 basis points. And everything got completely annihilated the moment Peloton came out with the report saying that they're going to halt production, because basically that was the catalyst to tell everyone, all right, guys, stop everything. We are going down. And because of that, that scared the market so much that everyone was just basically crippled. Okay, at that point, everyone was crippled. You can see all the tech stocks kind of doing a U-turn back down. All the tech stocks you see, they're all going up. And then the moment Peloton came out, okay, there's another company that was actually affected by Peloton, which was Affirm, because Affirm was actually with Peloton. And then Affirm kind of go down all the way to about $59 or so. But then people started to buy the dip, and then Affirm kind of went back up to about $60, $65 or so. And then they kind of just stabilized at about $62. But yeah, you can kind of see this entire movement with the tech market. You can see Apple was kind of going to a 170. After that happened, Apple basically dropped to like 162, and it's not normal for us to see Apple suddenly drop like this either. Apple was actually up 2%, and then it went down, closing at negative 1%. That's a 3% move on the biggest company in the world. Okay, this is why this is so crazy. Okay, Bitcoin prices fell sharply on Thursday night, while Ether price also dived, wiping off nearly $150 billion from the crypto market. Bitcoin fell by nearly 8% in the last 24 hours and was trading at $38,709 as of 1:42 a.m. Eastern time, according to CoinDesk data. Ether, the second largest cryptocurrency by market cap, dived over 9% in the last 24 hours, trading at $2,853. So yeah, I would assume that this is all movement due to the Nasdaq. I'm almost certain that that's the reason why we have such moves that was happening. But yeah, okay, Bitcoin prices have fallen sharply since November, tumbling more than 40% from Okay, and I think this kind of goes back to what I actually said before. I do not want to keep on coming back to this, which is the crypto winter that I talk about. I don't want to just take one prediction that I actually made correctly and keep on talking about it. But I think that I feel that this has already transpired to something even more. It's not only just what I said and was right, because this has been going on longer than I expected. I wasn't expecting the crypto winter to last this long, and right now it's just going longer and longer and longer. So right now, I feel that a lot of us might actually be crippled by this situation. We don't know when are we supposed to buy the dip, because I'm pretty sure people who are actually bullish on Bitcoin bought in the dip at $42,000, and people bought in at $41,000, at $40,000, and right now we're at $38,000. I'm not very sure if people are really that willing to buy in on the $38,000, and then when it do drop to $36,000 or even $30,000, people start to panic. And I think this is the reason why people are so worried about the market when we have so many stimulus coming into the economy. We have more than $3 trillion getting injected into the economy, and that's just from one country alone. So we have to take into consideration that so many other countries, so many other governments, they're giving so many stimulus into the economy, and people are just basically taking all this money and either investing in the market, spending it for someone else to invest in the market. So ultimately, all this money is all going to concentrate inside the economy, and right now we are taking the full brunt of it. Right now we are taking a lot of losses because of this. People are starting to pay back on their margins. People are starting to pay back on loans that they've realized that they couldn't substantiate, and because of that, I feel that I don't want to be so bearish to say that we're going to see a recession, but I'm not gonna lie, we might see a recession. So yeah, honestly, I'm just stumped. I am just stumped. Okay, like the amount of money that I lost in the past 3 months just on paper loss alone, like, bruh, if I actually tell you how much money I lost though, I mean, like, I don't even want to do an update on my entire portfolio, because I think it's just going to be ridiculous for me to show. Because, like, I think in the past 3 months I've lost about 30%, 20% ish. So yeah, it's horrible. It's horrible. The market is definitely not nice to us right now. I'm not expecting the market to really be nice to us in the very, very near short-term future either. So yeah, I think that literally everything is red. The only thing that is actually up are your short markets, which is your swaps, and volatility index. Volatility index is at 25 points. Okay, we expect volatility index to be at like 15 points, 14 points. Right now it's at 25. So you can see how volatile the entire market is right now. And yeah, I don't think we are gonna be having a very fun market in general. I think everything is just gonna go down substantially, actually. Yeah, and Netflix. Netflix. Okay, Netflix is still going down. Netflix is right now at 21% on the downside. They actually pop below $400. So I don't know, man. The market is just so, I don't know. I don't know what the market want to do. Okay, but anyway, I am late for my dinner with my friends, so I probably should go off soon, and I'll upload this for you guys. Hopefully, you guys will be seeing this at about 6 or 6:30. I'll see how it goes. But yeah, thank you guys for watching. Oh yeah, hold on. Before that, let me just at least go through with you guys what are the things that I did buy. So at least you guys this week. Wait. So this week it would be from the 14th. 14? Yeah, 14. Yeah. Okay. From the 14. Okay, I'm just gonna give you guys like a rough rundown of what I actually bought. Okay, I bought more Robinhood. I bought puts on Lucid. I bought shares in Snapchat. I bought puts in Funware. I bought calls in Boeing. I bought calls in Palantir. I bought puts in Peloton. Okay, fully being transparent right here. The moment I saw Peloton drop that huge candlestick, I did not even realize what news was out. I immediately bought puts on Peloton, and because of that, I think that kind of worked out. And then I bought calls on the firm. The calls on the firm basically was because when I saw a firm basically go all the way down, I just thought, you know what, a firm is gonna rebound, so I bought calls on the firm. I bought puts on Apple. Okay, so the moment I bought puts on Apple was when I realized that the entire tech industry is going to have this huge transition to a bear market. So I basically solidified or so-called ensured that all my calls in Apple basically went to zero. That means I lost about $3,800 or so in Apple alone for the calls. But instead, I actually wrote it into puts for Apple puts. Saying that it's out of the money, of course. I don't think I have that much money to do so many in the money options. So I basically bought puts for Apple, striking at $150. Of course, I do have some time for it before. Yeah, my friends are calling me, but I'm gonna settle this real quick. And also, finally, I also bought calls in SoFi. So I'm pretty sure that SoFi has been going up and up and up, and that's why I think that's such a good thing for me. But anyway, I'm in a rush. I'll see you guys on Monday. See you. Bye.